The ringgit might try to climb towards 410 against the dollar, but you tell you what's really important, Sophie? Crude oil. And where WTI concludes the week, because we see $35 as heavy resistance. If the oil markets do not conclude above $35, sorry, then this means that the ringgit might suffer some profit taken early next week. However, on the other side, if this oil rally manages to maintain its legs, this could be even more positive for the local currency.
What indicators are you looking out for that oil run?
Basically, announcements about OPEC. There's a lot of speculation right now that there could finally be some sort of collaboration with different OPEC producers getting around the table and actually agreeing on some sort of production cut. To be honest with you, the rumor is a bit more true to understand than actually the expectations of it happening, because it's going to be very difficult to get so many different oil producers around the table, combine and collaborate, and actually agree on who's going to cut production and where.
So you're seeing the factors feeding into the ringgit's movement more on the external side or the domestic side?
To be honest with you, it's still the external side that is running the most momentum, but this news from yesterday, it did improve domestic sentiment as well, but more on the longer term, it's still external risk, so China, oil markets, and I would say dollar demand a little bit, but more it's oil and China.
Now in China, we've been seeing the PBOC intervene several occasions to prop up the yuan, the impact on the ringgit.
I personally believe that the trend of the Chinese yuan is still going to remain weak. I think that the China economy is going to continue to slow down. Economic data is still not improving, and this is still going to be a risk for the emerging markets, because basically the PBOC will continue to set the reference rate to gradually weaken the currency. I do think that the news at the beginning of the year, where they set the reference rate very high suddenly, they're not going to surprise the market so much now, but in the mid and longer term, the trend of the currency will still remain weak.
This has been a fairly eventful January, and we had the Fed meeting this week. Not as much anticipation around it as December's meeting, but there was some commentary out of there which was a little surprising given their tone about global risks.
Exactly. And this is why at the beginning of the year, I found it really surprising that Federal Reserve policymakers were speaking so publicly and confidently about the expectations or the possibility to raise interest rates 4 times in 2016. When you consider how hesitant and completely resistant they were towards raising interest rates once, this is a very ambitious call to make. So I think Wednesday's was a lot more down to earth. Look, global economy, there's still risks out there. We do not know how the first interest rate rise is going to actually impact the US economic data. I think there will be an interest rate rise around March and April time, but these expectations, they might raise interest rates 4 times in 2016. It's nothing but ambitious to me.
So you're pricing in 1, 2?
I think that 1 March and April, 1 a bit later in the year. I would think that 3, if you're going to be ambitious, is the most realistic right now, but personally, 1 or 2.
And taking a look at the way January has panned out, who would you call the winner in the currency markets?
Winner is the Japanese yen, and basically it's for the cause that we were making in the FXTM Q1 outlook, that basically equity markets had not yet digested to such a prolonged period of commodity market weakness. And then on top of this, we knew that the China risks were going to escalate once again. So what we really saw was these external risks that have been impacting the emerging markets more than most, they intensified once again. So this brought a lot of demand towards the yen. I think that this unexpected surprise this morning where they've eased monetary policy, what it's really done is produce another selling opportunity for the Japanese yen.
And what's your assessment then of this surprise move by the BOJ?
Bank of Japan likes to surprise people. And basically what they've done is they followed the path that was set by the European Central Bank in around October 2014 by setting a minimum deposit rate. What it's basically trying to do is encourage further domestic spending, because this is one area of the Japanese economy that is very weak. But to be honest with you, it's aimed at improving inflation as well, and inflation is notoriously difficult to improve in Japan. I think the markets are once again going to put more expectations the Bank of Japan will have to be forced into further action.
So the yen holding up the trophy, who is the loser for the month?
Loser is the British pound. Basically, recent history once again repeated itself. The British pound was haunted by very weak investor attraction, because basically the door for US interest rate rise in 2016, not only was it left wide open to be pushed back, but investors are now pushing it even further back. Then on top of this, you've got slowing growth in UK economic data. There are concerns that any European economic weakness will have a downside risk on the UK economy. But talking about Europe, there's still unconfirmed suspicions that later this year there could be a possible Brexit referendum. And unfortunately, this will represent a lot of risk to the British pound, regardless of whether it's been confirmed or not.
How does this feed into your view on the pound ringgit?
I think that if you're a Malaysian consumer right now and you're looking for the currency to strengthen, what you really need to do is start looking away from the dollar, because dollar demand will be stable for a little bit longer. But it is against those currencies that are weakening is where the Malaysian ringgit can show some signs of momentum. So I'm looking at the British pound, New Zealand dollar, Australian dollar, but I don't think it's going to be so possible for the euro quite yet.
Now, one of our guests today, they say there's not much out there looking very attractive. But in the currency markets, where are you saying put your money?
I think that basically what it is right now, if you're an educated trader, you need to use your technical indicators. On the euro dollar, you're seeing 110 as heavy resistance. So any moves towards 110 on the euro dollar are still a potential selling opportunity. British pound, the pound dollar is now trying to rebound towards 1.44. This is once again seen as heavy resistance, so sell on rally opportunities. But what I really would look out for now is the oil markets. I mean, if we do not conclude above $35 for the end of this week, so trading today is very important, this means there could be some profit taken early next week.